Hello and welcome to Growth and Value Stocks. My name is James Boyd. Today's date, August 5th. Hopefully, wherever you are, it's nice and cool, at least inside. I'm in Salt Lake City and it's not been cool. All right, we got Michael Fairborn with us in the chat. Say hello, Mike Fairborn. We also got with us Gary, Seth, Cecil, Scott, aloha back to you. I got my Hawaii shirts back the other day. It felt great. Dom, now I know why you're always in a good mood. Vlad, JP Paulin, and also many others, Mike Morrow and others. Now, just real quick as we get started, remember that Mike and all of us coaches, we do post educational content and announcements on X. My handle is @JamesBoydCS. Mike will post his handle in the chat. That way you can click on it and follow him. Now, just real quick, we talk about growth and value stocks, occasionally some income stocks. Okay, so really it's trying to say when we look at the categories of investing, growth, value, or income, where is there active market investor participation? Where are those strong trends? Is it in growth? Is it in value? Is it in income? Now, that doesn't necessarily mean you're going to invest in growth or value. You might just do income because that's where you are and what you like. But we want to pay attention to that as far as where is there an appetite that might cause the trend to rise. As we get started, remember the information I talk about here today is done for general informational purposes only. Also, Schwab does not recommend the use of technical analysis as a sole means of research. Our examples will be done on the Paper Money software application. And if we do bring up a stock that does pay a dividend, understand that those dividends, they may reduce or stop paying the dividends. The moral of the story is the dividends policy is not infinite. It doesn't just go out in time indefinitely, okay? It's based upon the business condition and what the board actually deems the company might need to do to be, well, to stay around, okay? Also understand that when we talk about investing involves risk, including loss of principal. Now, let's go ahead just real quick. So let me ask you a question before we get started. Is there anything unusual that stood out today when you looked at the market to begin with? Did anything stand out and said, this is unusual compared to what we've seen in the last couple of days and or weeks? Anything? I think if you were looking at kind of the indexes, maybe if you're looking at some products that track prices, you might have said, James, the thing that kind of caught my eye a little bit is gold. Now, if you look at, let's say, copper, okay, we know that copper has actually been strong, okay? Copper's been one of the names, and this is going to relate to what we talk about. You look at the copper prices, those have been actually kind of grinding to the upside. You take a look at gold here this morning. Gold was kind of going into a descending triangle, and it started to poke its nose above the resistance, and you kind of see that it this morning pushed pretty good. How many days do you wake up where you're up 100 on gold, and it's not just up 100 on gold, it's up 100 when it's above support? That's the big difference. Now, why do we bring this up? Well, obviously, when we talk about, let's say, growth or value, right? We would put gold into, let's say, a sector, if you will. That sector, it could be of itself, precious metals. But when you look at, let's say, the sector itself, one of them, it could be IXB. Okay, so number one is the investor might say, I'm going to try to go maybe copper bullish itself, gold bullish itself, or just by the basic material sector. The thing that we don't know, unless you did your due diligence, is if someone buys a basic material product, if they considered it, how much of that is precious metals? Okay, so that would be something the investor would look at. So remember, think first, would the investor consider buying the specific product itself, like gold or copper? Second, would they consider buying, let's say, something like the sector and or industry group? Then below that, then comes what? The stock. All right. So always think in that kind of format. Now, let's kind of fast fire through with what we're seeing here today. Dow Jones. I mean, can you tell me? I mean, if you look at the Dow Jones here, large caps. Now, remember, when we say large caps, we are talking about Home Depots, JP Morgans, Apples, Amazon. Really, these are the billion, trillion, well, probably $500 billion, well, 300 billion or higher companies. Uh, some of them over trillions, over $1 trillion market cap. But some of these, think of these also as international companies as well, not just here in the US. Dow smashing higher. That on the weekly chart, which we brought up, if you pull that up, there's the weekly chart. This, let's take that to weekly. That's what it looks like, okay? And if you look at the Dow Jones on the weekly chart, we talked about those orange candles on the weekly chart where there wasn't any purple. And then this week, here we are, we're Wednesday in the middle of the week, and that's the middle of the week candle. Wonder if you're on vacation on Monday and Tuesday. This is why the investor says, I'll take a vacation, but I'm still going to be watching some while I'm on vacation. Okay. Now, if we look at, let's say, the S&P 500, okay, where's that at? 20 points there. Oh no, we're at the top. Red candle, sign of a top. That's not quite how that works, right? Now remember, on the breakout itself, the second candle day tends to be the high point. Tends to be, not always. Look at the Dow. And then you could actually get where the price tries to pull back and make a higher low. So this is kind of par for the course. Second candle day, intraday high. But if it's even a red candle, just might be the process of really trying to make a higher low on the S&P. The equal weighted here, you're going to see that was also continuing to grind to the upside. That has been such a, well, nice way to look at the market that when the semis went down, the NASDAQ went down, the equal weight was saying, look, it's the sell-off is concentrated in certain areas. It's not in the broad market. Now remember, if we are going to get the market to go up, you want to actually see where's crude oil, okay? If the market is going to go up, sometimes it can have an inverse correlation to oil down. When we actually look at, let's say, the VIX, that has not been a factor. That's a second tailwind for the equity market. When we actually look at the rates, which is what valuation, some of the valuation is based on, of course, those rates over the last 4 days, 3 days, been dropping down, and the US dollar itself, that has been dropping. So we would have to say we have at least 3 of 4 tailwinds for equities. Now, if there's anything that I'm going to impress upon your mind over and over again, these 4 independent variables, VIX, crude oil, US dollar, and interest rates, you better be looking at these things. These have been really very nice tools to really see, is the market likely going to be bullish or bearish? Let me repeat, oil, VIX, rates, and US dollar. The more of those that are going down, the stronger the chance that the equity markets are actually going up or could be going up. Now, let's take a quick look at, did I miss anything? Let me check. Now, Mr. Russell, let me say sorry to Mr. Russell. Small caps even getting involved. Why do we care about the small caps? Well, the thing is, because if people are buying the small cap companies, this is like, speculation, right? These are not the multi-billion-dollar balance sheets of JP Morgan, Home Depot, and Apple and Amazon, right? So if people are buying these, you have some risk-taking behavior, okay, of investors. That doesn't mean the investor has to buy small cap stocks. Now they might buy something that tracks the index, okay? But if we call it a sentiment gauge. If someone's buying this, there's a really good chance the NASDAQ is actually going up, okay, as well, which is maybe more what they might consider. Where's the NASDAQ? Well, that NASDAQ, if we pull that up just real quick, we talked about snapping back, potentially back up inside the channel. We talked about that on Monday. And here we are halfway through the dadgum channel. Now that's a part of what we talked about. But what we really want to bring up here today is the semiconductors. And where are they at? Well, the semiconductors, if you pull those up, that's the one where we're saying, okay, is this a real reversal here? Now, so far, now remember what we said, okay? The second day of the breakout tends to be the intraday high. Here we are, red candle. Now what we want to see is how many days do we go down? When I say down days, I'm saying red candles. If we only go down for one red candle and then we do a green candle, or let's say a close above the high low day, etc., well, that's showing strong momentum. The shorter the duration of time that we go down, the stronger the momentum that we have currently. So our focus actually here today that I like to bring up a little bit is I like to talk about a couple precious metal stocks that have been beaten down. Second, I like to bring up a couple semiconductors among some other stocks. Now, the first thing what I want to just kind of go back for just a second, okay, is when you get a breakout, like we saw in the SPX and the SOX, the second day tends to be the intraday high. From there, be watching to see how many red candles do we have before there could be green candles again. And that green candle, if we get a green candle, that is the higher low after breaking out. Okay? Now, just real quick, one thing out, let me draw this so we're crystal clear. So if I go down for, let's say, 2 days, hence another red candle, okay? And then all of a sudden, I get something like this, right? A green candle, all right? So that's not close above the high of the low day, but that's the potential start of a bounce. If all of a sudden we get something like this where we gap up to the upside, that's your down day, red candle, close higher day, gap, CHG, okay? Close higher, gap. That's the close higher day. The close higher day would be like a harami, a spinning top. That close higher day, green candle, is not close above the high of the low day. That could be a starting point of a bounce setup. If all of a sudden we get just something like this, where in one day we do this, where all of a sudden we actually show a candle like that. Well, now we've seen this before, okay? Closed above the high of the low day, a bullish engulfing candle. Here's the thing. What happens is when you get a breakout, that already kind of unsettles some people. When you make a brand new high and you get a red candle, you feel better that you didn't buy. And then it pulls back. You're saying, I'm waiting for a deeper pullback. A lot of times that deeper pullback doesn't happen. And the fact that it only goes down for 1, 2, 3 days before you get a green candle unsettles the investor even more. Why? Well, because they were expecting a deeper pullback, right? If it breaks out, you're not expecting a deeper pullback. You're expecting red candles of less than 3 days, and then you're actively looking for hold entries or close higher gap entries. That is what you're looking for. I am looking for a deeper pullback. Doesn't tend to pay out a lot of times because you had a breakout. And remember, it always goes back to, if you just made a high, the highest chances to what? Make a higher low. Okay? Welcome to higher lows. Welcome to bull flags. All right. Now, had to spend a little time on that because a lot of what we kind of talked about since Thursday is kind of psychology a little bit. Okay? Now, let's kind of talk about some examples. Now, the comment says, Bill says, what about getting above the 50-day SMA? 50-day SMA. Okay? So let's bring this up. Now, that just shows you right there, Bill, with how I said that. 50-day SMA. The only time we're looking at a 50-day SMA is when the price has dropped. Okay? Now, I don't look at a 50-day SMA. Okay? That's first off, just being brutally honest. Okay? We would have like a 30-week moving average. The moving average that we would be looking at is the 10-day, 10-week exponential moving average. If we're talking about, let's say, on a weekly chart, that is at 12,012. Okay, that's on the weekly. If we drop this back to, let's say, if we did the 30-period moving average, let me just double check. Yeah, that's 30. The 30-period moving average is 12,409. Now, if you're saying, look, maybe I'm not going to look at the 50, maybe I'm going to look at the 30, I want to wait until we get above the 30-period moving average before we get in. The only thing I would say to that is be careful, because if all of a sudden you get a big green candle above that moving average, you kind of feel like you miss a little opportunity to maybe nibble in, okay, a little bit. And maybe the investors should focus on dollar cost averaging versus making the entry all about one data point or candle on the chart. All right. So in other words, the investor might have bought the diagonal breakout. Second, they might buy the bounce. Third, they actually might say, look, I'll add the last remaining position if I can get up above the 30. Dollar cost average it, okay? That might be something the investor might consider. All right, now, let's actually go to a couple of examples real quick. Now, speaking of resistance breakouts, well, one that kind of broke out here today, which had not broken out in a while, is the NVIDIA. Okay, we want to be crystal clear on some of the routines that we do. So if I'm looking at the market, okay, and by the way, on the left-hand side, we have that, which I won't repeat, indexes, which is applicable to this class, sectors, Dow Jones, NASDAQ, and S&P 500. I have S&P 500, but we could even put the 100 as well. If we put the S&P 500, what we're really trying to do is also include the airlines and the home builders and the casinos. All right, now, if we go back up, that's on the left-hand side. We go to Market Watch. We now go to quotes. Now, this should be a little interesting. So when we look at, let's say, the trend column, the more stocks that we see that are in that trend 3 condition tells us there's many stocks, quite a few stocks, that are above their 10-period moving average and their 30-period moving average. Now, that trend, that is on the daily. The trend W for weekly, there's a number of stocks that are in that trend 3 condition. Why do we care? Well, because if we had someone call us up and say, yeah, the market this, the market that, we don't know what's going to happen abroad, to all that, okay? The moral of the story is technical analysis is not about rumor, hearsay, and popular opinion. It's about what are the charts showing. And those charts are really showing a current trend above the shorter term moving average, the 10 and the 30. Now, what you're also going to notice is on here, we have a lot of holds. We also have here a couple stocks that have actually hit a 20-day high and a 55-day high. Okay. Now the comment was, can we get the script for these columns? Yes. Okay. The script for those columns is going to be right here. Okay. And right here, meaning that if you go to that page, you're going to see that any of the scripts that we talk about, I just pinned right at the top of my page. Okay. And you're going to see that if you said, I would like that trend daily, that's the column heading. What's the purpose? Help identify current price trend relative to moving averages. What's the script code? The script code's in blue. Okay? So column heading, what's the purpose? Script code. The script code is in blue. That's where you type it in on the platform. It is case sensitive. Now, let's go back to this just real quick. Now, when we look at NVIDIA, where's NVIDIA? It's right there. Now, NVIDIA today, trend 3 on the daily, trend 3 on the weekly as well. On the relative strength, it actually has been quite strong relative to the S&P 500. It's showing a close above the high of the low day with a 20-day high, and it is showing a today breakout. Now, that doesn't guarantee it's going to go up. It's just showing that's what the current status is. Go and verify. Script's not guaranteed for accuracy or timing. You should have an understanding of what the script is trying to explain, and could you verify it? Now, if we go to that chart, NVDA, let's spend a little time on a couple of these semiconductors. Let's start off by looking at NVIDIA, but I would like you to type in what other symbols maybe should we look at? And whatever you tell me, I'm not going to tell anyone but Jax and Fairborn. Jax is my dog. Okay, so we're buddies. Okay, partnership there, and Fairborn. So it's just going to be a closed circle here. Now, if we look at this, we got earnings coming up right on the date, August 26th. So there's about 3 weeks there. A lot of times we like to kind of look at this and say, hey, what does this look like on the weekly chart? The weekly chart looks like as follows. Now, this is the candle. The key word is so far. Okay. Now, if we look at this, we might be saying there's kind of been a prolonged flag. Now, the Canadians, they would actually say it fleeg. Barbara Armstrong with us is not with us for a little bit. She had surgery. Speaking of Canada and that maple leaf, Canada today also making a brand new high as well. Now, when you look at this, kind of a bull flag, longer flag, but on the right-hand side, trying to break out to the upside. Now, let's go back to the daily chart. What we're going to do is we're going to right-click on the chart itself. Let's go to the paper money account, NVDA. And what I'm going to do there is on NVDA, we're going to right-click on the chart. If I right-click on the chart at the current price, that's where the order is going to try to be. We're going to go buy custom, and I am going to go, in this case, with OCO bracket. Now, I'm going to put like a target of 235, which is near the prior high, dated GTC. And the stop is we're going to take it underneath the breakout area. Now, here's the deal. If we look at this, 212.15, less 2%, 207.90. Okay? 207.90. Now, let's be crystal clear on what this is saying or showing. If we go down to the price of 207.90, it's a trigger to sell. The reason why it says market is it's going to sell at the price it's available and where that fill could fill. The key is it could fill at a lower price. So the stop price is the trigger to sell. Okay. If the stock is not really pushing aggressively down, it might get stopped out right at 207.90. The stock is going down a little bit more aggressively, it might fill at 207, 205, 202. It depends upon how quickly it's going down and liquidity. Now, what I'm going to do is go data GTC. There it is. So trade number one that we're going to do here is we're going to go long NVIDIA. I spend a little time in this area here today. 26 shares of NVIDIA. Now, I want to go back to one that has been a pill. Okay. And I was actually kind of thinking about one, and I'm going to include Dell here in this discussion. Okay. Now, I'll explain what I mean in just a second. So trade number one, NVIDIA, long the shares of the stock. It's a stock position, target, and then a stop. Okay, now, the fact that the earnings are, let's say, right here, this might be a trade that the investor might say, look, I'm going to try to ride it for 2.5 weeks, and then not try to hold it over earnings. But our classes, the ones that I teach, if those earnings are 3 or 4 weeks out, the investor is actively looking for price movement and trying to get a movement ahead of time. The 3 to 4 weeks prior to earnings tends to be the sweet spot where sometimes you can get the price to move, where investors start to posture themselves. What do I mean by that? Well, they might say, I want to be long or I want to be short, right? They start to build positions where they say, look, I'm going to actually, I'm speculating on what the earnings could be, the speculation. Or maybe what the earnings, if they're going to hold their earnings, what the earnings could actually be and how the stock might react. Our goal here is we're not going to hold over earnings. So this trade length is probably going to be about 2 to 2.5 weeks. Confirm and send. We talked about the stop, send the order. Now, I want to go back to just real quick Dell, okay? Now, we've had Dell bullish. We've had Dell bearish. And Dell has been one of those names that is just kind of, well, it's been all over the place. Fair, okay? Now, we talked about last week a short position. What does short mean? Short means a bearish stock position. Now, if I just kind of pull this up, if I kind of speculated, I think there was a time where we probably went long, probably somewhere like right there, and probably was stopped out right there. We went short right here when we did make a new low, and the stock went to the upside. The last two times that we took a stance on Dell, they were wrong. Now, if you look at kind of the position now, we're up about $650 because we took it, we flipped the position and went long again. The thing I said yesterday is, how many times can you do a trade and be wrong without killing your psyche? Okay. So if we lost, let's say $500 here, we lost $500 here, those were independent trades. Okay. That's how I look at them. I don't think of it as Dell. If you think of it as Dell, then you're going to try to get even with the stock. You're just trading a stock, XYZ, hypothetically, ABC, and each trade is independent, okay? Now, the reason why I'm bringing this up is on Dell, let's bring up kind of where it's been a little bit fundamentally, okay? Now, we said last week we could say it's a little bit of growth and value. Income? Don't think so. But when you look at some of the metrics just real quick, if you pull this up, yeah, it doesn't pay any yield. It pays some, but it's only 63 cents. That PE currently is 37. Now, when we looked at it last week, we did notice that there was some value in terms of the price multiples and also looking at the PEG ratio. When you look at actually Dell itself, and you go back and look at this at a 3-year weekly chart, this is what that chart looks like. Now, when I show you this chart, it just scares most people. My gosh, there is no way, okay? Let me just kind of say it like this. When you bought your house in 1970, 1980, they were at 2,000-year highs. When you bought your house at 1990, you were within 2,000-year highs. You bought your house like I did in 2002, it was at a 2,000-year high. 2004 is 2,000-year high. Bought another house in 2007, it was at a 2,000-year high. The moral of the story is, reflecting upon price is not completely fair because it's not factoring in inflation per se. Does it make sense? Now, what I want to kind of do here, someone told me over the weekend, they're like, yeah, when I was younger, I would go out to an all-you-can-eat meal here in Salt Lake City for 99 cents. Okay, I don't relate to that, okay? But so comparing price over time, it's not telling the full story. Now, in this example, what I'd like to do is I would like to try to buy, now remember we talked about the breakout, intraday high. That's the second day so far. What we're going to try to do is we're going to try to buy on the dip of price action. Now, if we buy on the dip of price action, we're saying buy at this price or less. Now, if we look at this, we're going to go down to buy custom, and I'm going to say with OCO bracket. Now, if we did a limit price, the first thing that we're going to do is we're going to change that to, okay, the limit there. And the limit is where you're saying, I would not mind owning the shares at that price. The price that we right-clicked on was $4.51 and change. The target we'll talk about in just a sec. The stop, where's the stop? Now that stop, now here's the con. If we said, I'm going to set the stop all the way below horizontal support, that's a pretty big risk. If I said the middle of the channel, if I said the top end of the channel, this is really what we have. So if I looked at this and said, look, I'm not going to take it down all the way down to the bottom because that's going to be a pretty big drop. I'm just going to say 422, 73. 422.73 less 2% is going to give us 414.27. That's where we lock in a stop loss. Look, that is not true. Okay. 414.74. What was that number? That's the trigger to sell. We don't know where the price could fill at. It could fill at a lower price. So just always remember the stop, it's the trigger to sell. Do not think of that to where you're limiting the loss because it's not a derivative, okay? It's a trigger to sell. Now, we're going to go data GTC. On both of these, data GTC. Now, the one thing is, I want to pull up Schwab.com for just a moment. And one thing that's kind of interesting about this is when you look at Dell's numbers. Now, some of us might be Apple users and we kind of make fun of Dell. Okay, some of you are Dell users and you make fun of Apple users. So funny. It's like Home Depot people and Lowe's people and Apple people and Samsung people, whatever. It's just kind of funny how we kind of lock onto certain things. Someone's right. Now, what I want to do is let's pull up Dell for just a second. Now, if you look at Dell, now the one thing we kind of have to understand is these companies do change over time. Okay. And we got to be made aware of what are they really involved in. I mean, for a while, Amazon just sold books. It's not completely what they do now. Okay. Now, the one thing is you're going to see this labeled underneath technology hardware, storage, which has been a big theme. Okay. When we say storage, think WDC and Seagate Technologies, right? All this data, where are you going to store it? Is it physical storage or is it cloud storage? Where are they going to store all the information? In a vanilla folder? Who has a vanilla folder anymore that's below 20 to 25 years old? 25-year-old and less doesn't even know what a vanilla folder is. Okay? A storage cabinet, a file cabinet, who even has one of those that's less than 25? Nobody. Okay? Now, here's the deal. So the moral of the story, what I'm saying is do not lock onto these companies and think what they did is what they always do. A lot of them, they changed over time. That's my point of what I just said. If we also come down to this, what you're now going to see is if you look at the dividend, we talked about it, it's been raised a little bit. Now, when I say little bit, about 20% of what it was, but it wasn't extremely high to begin with. That yield is only 0.5%. Now, if we look at the numbers, the upcoming earnings, those numbers are actually up a little bit from where they were. Well, the forecast, Q2 27, Q1 28. Okay, so that's the upcoming. So the consensus when you look at this is for Q2 is 489. That earnings comes up September 3rd. So there's a little time here. Could this stock be trying to go up in speculation of what the earnings might be? Now, it's also kind of important to see what the history has been a little bit. The estimate is in that dark blue, 230. They beat it by they got 232. They expected 247, 259. The last two, though, have been they expected 294, but they got 486. Now, when you look at the forward PE, this is kind of why we said last time, it does have a little bit more of a value flavor to it. Those are not extremely high numbers if we're talking about a tech stock. But why did we do a bullish trade? Why did we do a bearish trade before? Well, because that's what the trend was showing. The Fed's whoosh made some comments regarding interest rates and inflation, and some of those stocks that are technology related, they were not as impacted as thought. Okay. They thought the Fed was going to be a little bit more hawkish, maybe make some comments on raising rates. Didn't happen, didn't materialize. That can be like oxygen to some of those tech stocks. Now, when we pull this up just real quick, I'm going to put that orders at 451.68. Target, we need that. Where would you put the target? And a stop at 414.74. Now, if you sit now historically, we would think of like thumb drives, right? You could say thumb drives, but a lot of us are not using a thumb drive. We're using maybe something that has a terabyte, 2 terabytes, 4 terabytes, 5, whatever. Where are you storing all that data? But I'll also repeat, the cloud. Some people do the hard storage, physical storage, plus the cloud storage. Now, we're going to come to the cloud in just a moment and some other physical storage. If I put a target right there, the reason why we're talking about this, if it can go to the upside, that's going to be about $69. Let's go 67. $67 on top. If we did that, if it broke out and if it went that direction, 67 is going to get us about right there. 520 if it did that. 520. Now, from last week, and I can't remember the last time we kind of got a little whipped. Okay. Staples we still have, but it's like up $188. But it was up like $1,300. Nobody likes to give anything back. Okay. Dell was a short position that lost and went back up. So you kind of got whipped, saw it on the Staples and the Dell. But again, one or two positions is not the whole entire portfolio. Did Staples really change from what happened from last week to this week? The answer is probably not. Okay. We're going to put a target at 520, and 414.74 is the trigger to sell. Yes, this is recorded. Speaking of that, let me pull something up just so we have that right there. So when we say the growth and value, let me share with you the playlist for this class. Okay. Now, if we pull up the playlist for this class, you're now going to see, here it is, and let me send this to you. So if you said, James, can I go back and watch previous classes as well? You can also see other classes Mike Fairborn taught that class 2 weeks ago, and other classes throughout the time as well. Okay, so good. Now, let's go back to this just real quick. So if I said other examples that are in this semiconductor, physical storage, cloud, I'll even throw in there cybersecurity, what would you be thinking? Now, one of those, when we say cybersecurity, one of the biggest ones is CrowdStrike, okay? CrowdStrike went up to a brand new high. Any other stock in cybersecurity, if we included that? Any other stock there? Now, yeah, so my first computer, well, my dad gave it to me, was a leading edge computer, floppy disk drives, and it's just funny looking back at that now because my phone has a terabyte of storage on it. A terabyte. Okay, I don't know how much storage that first computer had in 1985. Wasn't much. Now, let's actually go to just a couple of these others. Micron, I want to talk about that. Seagate Technologies, WDC, and SNDK. The last three, Seagate, STX, WDC, SanDisk, these are all stocks that had monster rallies to the upside, have pulled back. Now we know that stocks go up and down, like breathing goes up and down, checking accounts go up and down, relationships go up and down. We're not scared about the up and down, but we want to kind of know, are there some maybe opportunities currently in the up and down? Now, what you're now going to see is a couple of these really look like they might try to, now the one that has the earnings today that could have an impact on the others, SanDisk. Okay, this is all hands on deck, is watching what some of these do. Now, these went from $1.22. Are you listening? $1.22 earnings per share to $6.20. Mama mia. 23.41. Okay, and we would like to kind of see, are these actual earnings? I mean, are these something that could be going forward? Okay, what's the expectation? Are there any one-off items, or are these actual business items? $33. Okay, so clearly some massive run up. Now the question is, could that continue? Now I'm not going to do that one that has the earnings today, but in the after hours, many investors are probably going to be watching that. Now the STX, when does that have earnings? That one has already had earnings, and the unusual thing about that is it had earnings, and on the earnings day it made a hammer. Okay, now why is that significant? Well, hammers do not have to be green candles. It gapped down, sold off, investors bought it and pushed it back up. Didn't close at the high, but gave a hammer-like candle. Now, what we're going to do on this one just real quick is we're not going to buy it here today because I want to look at one other one, but we're going to put an alert right at 908. If all of a sudden we start breaking about 908, let us know. Could be getting out of that basing pattern. Would not be that surprising if it did. Now, WDC. WDC, when we actually look at that, also has earnings today. So SanDisk and WDC has earnings. Okay, so we're not going to touch that. But the one that we are going to look at is MU. MU already had earnings. It, like SanDisk, went from $3 to $4.03 to $12.20 to $25.11. Now, when you kind of think about that, $25.11, and you go back 4 quarters ago where we were at $3.03, we're talking about a massive jump there. We're talking about a jump of over 800%, 700% when we actually take a look at that. Okay, massive. I mean, how many times do you see a company like Micron, and this is not just a startup, have over a 700% increase, 800% increase in the earnings per share in a year? Now, the thing that might happen is that storage and what they actually do. What do they do? Well, let's pull this up. It's actually going to be an information tech. They sell memory and storage products. Now, with a lot of the AI, a lot of the data that they're collecting, they need a place to store it, to review it, etc. And so, again, could it be on physical, like a physical hard drive or a storage item, okay, like or it could be like a cloud. Cloud has also gone to the upside. But the example that we're going to show in this example, and let me send Dell since we can send it now, okay? We're going to come into Micron and we're going to start to try to build a position on Micron. Now that Micron, if we go back and see what does Micron really look like, here's what it looks like. Now this downward diagonal line is going to be probably somewhere about right there. This is the second time that Micron, if we drew it like this, has gone above the breakout line. There's another push right there. Here we are here today. Now, a lot of times when we break out, someone might say, well, how do we know it's going to go up? Look, if you ask me that question, that tells me you're putting it all in at once. Okay? You don't have to do that, or even you might consider, I am just going to put it in a third at a time, a half at a time. So what I'm going to do is I'm going to go buy custom with OCO bracket. I'm going to put a target back. One of the resistance areas that's not the top, but is about 1068. Okay? It's not the top. If I looked at, let's say, the support level, might be where the moving averages were. Now, the one thing we would say about some of these semis is they can move around a lot. Okay? Now, if we look at this, 832.02. 832.02. Dated GTC. Now, if you take a look at this, you're now going to see that we have a target, we have a stop. The stop is saying sell it. It's the trigger to be sold is at 832.02. Could be filled at a lower price. Now, there's a lot of comments regarding, let's say, the US and China. Look, it's an AI race. Micron, they make some of those. They do products. They sell memory products all over, including mainland China, Hong Kong, Europe, internationally. And you're going to also see that it has a cloud memory business. So it's not physical. They do cloud as well. Many of you now know these, what they call solid state drives, okay, SSDs. Now, if we pull this up, trade number 3 is we're going to go long Micron. We'll adjust the position size. And if we did that, that's going to be about $5,900 worth of stock. If we did a full position, in our example, we're going to do about $2,900. If we see that stock go up higher, when I mean higher, I'm talking about if we go up higher than, let's say, 975, we're going to try to add to the position. If we get a red candle and then a bounce, going to try to add to the position. But this is really the starting point of a new position in Micron. Now, last thing I want to say here in closing, keep an eye on the NASDAQ. We're at the midpoint of the channel. Could we go all the way to the top of the channel? We pulled this up because some of the hardest moves in the market tend to be what we call V-type rallies or snap-back rallies. We talked about that last Thursday, Friday, Monday, Tuesday, and today. It wouldn't take a whole lot more to go all the way back up to the top. And if we go back up to the top, Who's going to cause that to go back up? Could the semis just be starting to get started again? Keep an eye on that. Now, I'm out of my time here today. I want to say thanks so much for your comments and your participation. Our next webcast actually coming up is going to be on the topic of managing an options portfolio with Brent Morse. We also, for example, have a class. Mike Fairborn is with us. He also taught the class on swing trading yesterday, and he also teaches market and sector analysis, so join him as well in his classes. With what we talked about, remember that all investing involves risk, okay? And be aware of what that risk is and ask yourself, is that something you would consider? Is that a fair amount? And could you accept that loss if that were to happen? This has been the class on trading growth and value stocks. We're looking at trading examples like we did in the growth area. Thanks so much for your comments and your participation. And stay tuned for Brent Morse coming up next. Take care. Bye-bye.